Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates, and then we're going to talk about 1099 loans. Great loan topic to talk about here today. We got the chat up on the screen. Feel free to drop a comment there in the chat as you tune in. We definitely appreciate it. We'll just wait a few minutes here to go live on all the different platforms and everybody have a chance to tune in. Hope everybody had a great weekend and is ready to get back to it here. So it looks like we're live on all the platforms. We'll go ahead and get it started here. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat, and you can drop any questions you have in the chat as well as we go through our deep dive topic here a little bit later. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president Nick Hershey and our sales manager Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live rates, and then we do a deep dive into a different loan type. Today's loan type is going to be 1099 loans because we specialize in non-QM loans, something we're very familiar with here at the Mortgage Calculator. So Jose will take us through a deep dive on that here shortly. But before that, we'll do what we do every morning, which is pull up the rates. So Nick, if you are ready, let's go ahead and pull up our actual live rates and see what they're looking like today.
All right, so before I pull these up, let's explain what we're looking at here. We're going to pull up a page that compares all of the different programs at once and compares the APR for the same scenario. So the scenario we're going to set up is a 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. We will set everything to a 760 estimated FICO credit score for all the demos and an estimated 40% debt to income ratio here for all the demos. And when we get to the DSCR, we will use a value of 1.5, which I will explain when we get there. So this will show us the general APR so we can compare across all of the different programs we have. If you'd like a full breakdown on itemized loan estimate that itemizes all the fees that go into the APR, please get with our team members. We have over 300 licensed loan officers to help you out. Let me go ahead and pull up the rates for today, which is June 10th, just after 11 a.m. Eastern. Let me make it big. And all of our standard rates are live here. Definitely had some not so great news the last couple of days in the market. So we've seen some rates go up a tad, but not too bad actually. So first option here, we typically quote for any customer. Most common option, 30-year fixed conventional loan for a primary home. Rates come in at 6.625 today. Final APR, 6.967, which is a touch higher than it was last week. Thankfully, we're not back up over 7 like we were a couple months ago, but definitely a touch higher than it was before. Hopefully, we see some more downward movement with some good news from the Fed here. Next up, if our customer doesn't qualify for a conventional program for any reason, next option we typically want to quote is an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio. So for FHA today, rates come in at 5.875 and the final APR with the upfront and yearly mortgage insurance that is required, 6.853. So our customer that qualifies for both actually might want to look at FHA as well. It could be a touch cheaper, but remember that mortgage insurance is required for typically the life of the loan. So definitely something to consider there. And if our customer qualifies for VA, this is only for our eligible veterans and active service members. If you are eligible, these programs are amazing. VA comes in today, rates as low as 5.99. Final APR with all of the fees and everything included is 6.314. So when we compare that across the programs, VA is going to be the best, lowest APR option, definitely the best option for our eligible vets. It beats FHA, conventional, and it also beats our next and final option, which is USDA. So USDA is only eligible for properties in USDA areas. We did a show on that the other day if you want to check out that map. But if you are looking in those areas, definitely a great program. Rates for USDA come in as low as 5.875 and the final APR 6.629, including all of the fees that are included. So typically our customers looking in those USDA rural areas will compare an FHA program or a conventional program, and notice the USDA is a better APR than both of these options. VA still would use VA, right? Because it's a better deal. Now, these 4 are the typical options that any other bank or lender will have, but if our customer doesn't qualify for one of these standard 4 options, most other banks or lenders will have to deny that customer, but that's where we love to start with our 5,000 additional options. So first up, for our additional programs we can offer, 30-year fixed non-QM program using alternative docs for a primary home. So if our customer doesn't qualify for any of these standard agency government programs, we can offer a non-QM alt doc program. So this will typically be using bank statements or similar. We also have 1099s, our topic for today, P&L programs, all kinds of different ways to calculate income. But if our customer doesn't qualify, typically for a conventional option and needs to use alternative docs, this option is amazing. Rates as low as 7%, final APR at 7.345. So notice when we compare these two, we're within about a half a point of conventional, definitely well within a half a point today. So a great option for our customers that need to use it. Definitely very affordable option. Now moving on to our investors. So first up for an investment property is our alt doc option. Again, probably a bank statement or similar here as the lowest rate option. Comes in at 7.5. Final APR 7.833 for an investment property. So let's compare that to our other investment property options. Next up is our conventional option. Remember, government programs, USDA, FHA, VA do not work for investments, but we do have our conventional option. So for a conventional program, rates come in at 7.5 today. Final APR 7.855, almost identical to non-QM alt doc, but definitely recommend all of our investors out there check out our favorite programs and our most popular programs. DSCR stands for debt service coverage ratio. No income, no employment used. We simply use the estimated rental income from the property appraisal to determine a DSCR value. The estimated rents can cover the expenses. That's a ratio of 1 or higher, aka the property cash flows. For our demo today, I put a value of 1.5 so we can see all the programs pop up. And the best option today for our standard 3-year prepayment penalty, which is the most common option for DSCR, comes in at 7.25 rate. Final APR 7.6. Absolutely amazing. This beats conventional with a 3-year prepay, pretty standard option. I would say 100% of investors would prefer a DSCR option, even when the rates are higher, but with it beating conventional, 100% for sure. Now, to sweeten the deal, our investors can add a 5-year prepayment penalty to get an even better rate option. So rates as low as 7%, final APR 7.316, which beats conventional by over half a point. Absolutely amazing. And we have a few other options. First up is our no prepayment penalty option. So if our customer doesn't want a prepayment penalty, there are options for that. Rates as low as 7.875. Final APR comes in at 8.231. So notice this is more expensive than conventional for no prepayment. So we always recommend our customers utilize the 3 or 5-year prepayment penalty options in order to lower that rate and get a little bit better deal. And the next couple non-QM options we have, very popular requests these days for our customers that have a low rate first mortgage, want to get cash out but don't want to touch that first mortgage, no problem. We have our second mortgage options. These are not HELOCs. These are 30-year fixed second mortgages. For a primary home here, the first option comes in at a much lower rate than a HELOC would be available at. So rates as low as 8.875. Final APR comes in at 9.099 for that option for our customer to get cash out of their home without touching their first mortgage. Jose has some episodes on that as well, how to calculate the blended rate. And same program for investment property. So investors, again, may have a low rate first mortgage that they don't want to touch. Instead of getting a cash out of the whole property, keep the first mortgage, get cash out with a second mortgage. Rates as low as 10.625. Final APR 11.137. And both of these non-QM options can use alternative docs like bank statements. So great options for our second mortgage programs, which is a pretty cool feature there. Let me go ahead and switch our screens. And we'll get back into today's topic, 1099 program. So 1099 is an option, obviously, on non-QM. It's typically not the most affordable option. So when I do those live rates there, notice I mentioned that the option that you probably see is the lowest rate option, typically a bank statement or similar. 1099s, it's typically a touch higher price. So Jose will show you some real live examples here with those 1099 options. And also each program varies slightly there. So Jose, let's talk about the specific options that you're able to quote there, since we can't necessarily do that on the live read show. And also explain why they would use these programs too compared to a bank statement, if you could, please, before we start.
Yes, good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. 1099 program, I would say, is an underutilized program simply because lack of awareness, and it's definitely not because it's not a good program. Because did you know that the 1099 program allows using 90% of the income reported on that 1099 form as the income for the borrower? In other words, there is only a 10% expense factor built into the guidelines, which is excellent when you consider that a bank statement program, which is usually the option that is selected for self-employed borrowers, allows up to a max of 80% profit or 20% expense factor in a best case scenario, whereas the default for the 1099 program is 10% or use 90% of the amount on the 1099. That is a great option. Obviously, there's certain restrictions to a 1099, which you would have to review the guidelines. But 1099 is an amazing program. For example, all of our realtors out there that all get 1099s from the brokerage, great option instead of bank statements. So, again, self-employed borrowers only. We have options for self-employed only 1 year with a 1099, and we can still do that program. There are certain restrictions, like you have to have been doing similar duties in your prior employment, but it is a very doable loan. So let's share the 1099 options today for primary and investment properties. Our first option here is our 90% LTV, only 10% down. 90% is the maximum loan to value for all of our non-QM and all non-QM products, not just our non-QM products. So 90% LTV max, no mortgage insurance ever on non-QM. The rate does have that built into it. So our first option here with only 10% down, and we have a 9.375 is our lowest cost option, and you can buy the rate down all the way to 8.375%. And this is at the maximum 90% LTV, 10% down. So now at the more standard 80% LTV or 20% down, look at how much better the rates get. 7.625 actually has a little bit of a lender credit, and you can buy the rate down to 7%. And there are certainly lower rate options in that. If you get some seller paid closing costs, then you can apply those seller paid closing costs to the loan discount and buy the rate down even further than 7%. And for our low FICO score option, we can go down to a 600 credit score here with only 25% down for your 1099 loan. So this is for our primary, and 11.499 is almost at par, and you can buy that down to 10.375%. And our investment property options, first we're pricing it down with a 3-year prepayment. 15% down is the minimum down payment for our investment property purchases. And you are looking at 8.875% as our lowest cost option, and you can buy that down to 7.625. Now, you will note great rates also, considering because on the investment property loans, we are allowed to add a prepayment penalty, which gives you a lower cost on the rate. So this one here is with a 3-year prepay, and then the same loan with a 5-year prepay, it's about 0.25% lower rate. Because here we're at 9.4, actually a little bit better than that, right? 9.499, almost at par. Over here, we were at 8.875, costing 0.75. So, and you can buy that down to 7.624 compared to 7.625. So not much of a difference when you get to the bottom of the rate, but definitely a difference at the top of the chart. And our investment purchase with 20% down, you can see now the rate gets much better at the standard LTV of 80%. 8.125 is your lowest cost option, and you can buy that down all the way to an amazing 7.125. And remember, folks, this is not full doc. This is using 1099 investment, 80% LTV. And I would probably say that we're beating Fannie Mae's rates there. And with 25% down, 600 credit score for investment purchase. And we do have options for you. 11.375, almost at par. And you can buy that down to 9.75. And these rates are actually a little bit better than the primary rates for the same scenario because of the prepayment penalty. And our last three options here are for cash outs. Our primary cash out is maximum 80% LTV. 8.75 is at par, and you can buy that down to 7.5% for our primary 80% LTV cash out. And now our last two options here are investment cash outs. The first, 80% LTV with a 3-year prepayment penalty. 8.99 actually has a 0.3 lender credit, and you can buy that down to 7.375. And our last option here is our 80% investment cash out with the 5-year prepayment penalty. You'll see the rates get slightly better. 8.75 with a 0.1 lender credit, and you can buy that down all the way to 7.125 for your 80% LTV 1099 investment property cash out refi. So definitely look to the mortgage calculator, not only for your agency deals, but definitely your outside the box deals, including 1099s.
All right. Thank you, Jose. I do not see any questions here, but definitely a great program to have. Pretty simple, right, Jose? It takes a lot of the stuff out of there.
I mean, this is so much easier than doing 12 months business bank statements or 12 months personal bank statements and having to worry about overdrafts, NSFs, declining deposit trends, unverifiable large deposits of income. I mean, if you have a 1099, that's 90% is the income of the 1099.
All right. Okay, no questions. Let's go ahead and wrap it up. Remember, 11 a.m. Eastern, every weekday we do this show where we go through the live rates and then do a deep dive into a different loan type. So we'll be back tomorrow with a new loan type. Appreciate everybody tuning in. See you tomorrow, 11 a.m. Eastern.